Happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties with another Monday market moment this week. Another question to answer. Why are homes sitting on the market? We are seeing longer market times. We're going to talk about that and why that could be in just a moment, but let's first jump into the latest stats. Right now, we have 4,882 homes for sale throughout the county. It's an increase of 80, quite a big jump from last week. Median list price $995, lower than the week before. Average days on market 45. Pending sales 2259, a drop of 81. So look at that diversity. 80 more homes for sale, 81 fewer homes under contract versus last week. Median list price $899, higher than the week before. Average days on market 30. Months of inventory has gone up. It had been going down for the last few weeks, but last week it went up 2.34 months of inventory. Here's a chart showing total actives and total pendings, and you can see the trend line going up for total actives. Even though normally this time of year we cap up the inventory and it starts going down, but homes are staying on the market longer, so we are seeing more inventory, and number of homes in escrow went down. Last week, we saw 794 homes come on the market, 4 fewer than last week. So even though there's a lot more homes for sale, only 4 more came on the market last week versus the week before. Median list price of $965, higher than the ones that came on the market the week prior. New pendings, 355, 10 fewer versus last week. So not a big drop week versus week. Median list price of those homes, $900,000, higher than the ones that went pending the week before. Average days on market, 28. Increase in the number of days on market up to 28, 5 more days. New pendings listed within the last week, 15. New pendings listed within the last 2 weeks, 122. So 4% of homes sold in a week or less. Last week it was 5%, and 34% of homes sold in 2 weeks or less. Last week it was 39%. Homes are taking longer to sell. Kind of building up to the story here of why that's going on. Last week, we saw 403 closed sales, to drop of 4 versus last week. The median list price, $899, higher than the week before. Median sales price, also higher than the week before, to $900,000. And we talked about that. There was somewhat of a big drop last week, but we jumped right back up again. Average days on market, no change, 23. The least expensive sale was in Mount Laguna for $180,000. La Jolla came in with the most expensive sale, $35 million. Pretty amazing home. Here's a chart showing new actives, new pendings, and new closed sales. And you can see not a huge change week versus week, last week to the week before, but a big jump in the prices. And you can see we're higher than we were just a couple weeks ago in both median list price and median sales price. Okay, Stephen Thomas came out with his reports on housing, and he talked about houses sitting on the market. And it's not just certain price points, it's kind of all price points. I love this chart. If you take a look in San Diego, $0 to $750,000. The current actives is 1297. The number of homes that have been on the market for 30 or more days, 637. So almost half the homes, 49%, have been on the market for 30 days or more. 358 have been on the market for over 60 days. That's 28%, with an average market time of 66 days. So almost half the homes on the market for 30 days or more, and almost a third have been on the market for over 60 days. But then you go up in the price categories, 47% of homes in the 750 to a million have been on the market for 30 days or more. $1 million to 1.25, 48% of the homes have been on the market for 30 days or more, and 1.25 million to 1.5 million, 44% have been on the market for over 30 days. And looking at the number of days past 60, number of homes that are still on the market after 60 or more days, 20%, 21, 22%. So a lot of homes are sitting on the market. Well, why is that? Well, here is the chart that shows the demand, and you can see, actually, I'm sorry, the expected market time rather has been going down, but we're going to start seeing that kind of go up, I think. Our market time is higher now than it's been in the last few years. More days on market is the expectation. If you look at the demand is actually up, we've seen demand go up over the last week or two. Why? Interest rates have come down. So we actually have seen more people out there looking to buy. In fact, this past weekend, the open houses that my team held had lots of people in. So demand is up. So why are homes staying on the market longer? Well, inventory is up as well. You can see the trend line inventory has been going up. We thought it was peaking, but it's going up. More homes may be coming on the market, more homes staying on the market. We're about to cross the threshold of 2022, and we're going to get to the point where we have more homes on the market now than we have had in the last few years, certainly since COVID. So that's kind of what's going on. That's why homes are staying on the market longer. We'll see, is inventory capped out now, or is it going to continue to rise? We'll have to wait and see. That's it for this week's Monday Market Moment. Don't forget to scan the QR code to track your home's value. If you have any questions about this information, how it might affect you, feel free to give me a call or send me an email. Be glad to help. Have a great week. I look forward to seeing you next Monday in the next Monday Market Moment.
Thanks for watching Monday Market Moment with Bryan Devore. To request a transcript of this week's report, send an email to brian@devorerealtygroup.com.